All right, so here, not going to take too long to explain what's going on. Just want to go over a couple things real quick. So I'm sharing my screen. This is UJ, of course, on the 1 hour chart. I want to just go over the setup. So very first thing you want to do is you want to make sure you have your um, time frame continuity. So basically, get your directional bias, right? Instead of saying, the trend, things like that we've been used to saying, we're going to say time frame continuity, ensuring that the time frame that we're trading off of, like this is the 1 hour right here. So we want to make sure we check on the daily and the weekly at the very least, to make sure that those match our trading bias or give us our trading bias. Now, if all three of those are in the same place or same direction, or what have you, then we have our directional bias, for the day and for the trade. Right now, I do have an indicator that I'm going to share with you that you can do that without having to switch the screens to know what what the higher time frames look like. And that's this. That's what this indicator is right here. This is part of a strat indicator toolkit that is on TradingView, and I will again give you the name of that before the end of this video. But as you can see, the hourly is showing us a basically an inside bar, which is a 1, and we can see that right here. 4 hour is showing us basically it doesn't have exactly what it is, but I could go and show you, but basically it's a two down bar. This one, the bar for the day is 1 up, and for the week is 1 up. And for the monthly, you can see where I'm sorry, these are twos. So 2 up, 2 up, 2 down, and 2 down for the quarter. So the month and the quarter, 2 down. And then actionable signals, I'll talk about that just a little bit. This is like a pending signal here that's happening for the reversal, right? And I'll show you what that looks like before the end of this video. But I just wanted to just go over the setup real quick. So like I said, the very first thing you want to do is you want to be able to go and get your time frame continuity. So I'm going to show you one of the ways in which I do that. Okay, so I'm going to share this screen first. So this is my multi-time frame screen. I've shared this before. So of course, this is the monthly, the weekly, the daily, and then the hourly. And as you can see, I have my order blocks or my supply and demand zones on there and things like that. So so when we look at the monthly, we see that the monthly we're at a 2 down. So we're the current candling for the monthly, the current monthly candle is showing us a 2 down, right? That basically shows us bearish pressure, but we do see that there's been a bit of rejection, as of late. And so we go to the weekly, and we see that the weekly is currently in a 2 up, right? Coming from a strong, so a 2 down, right? It went down quite a bit, right? It created a new low. We took out some lows, quite a few lows, right? Till we got to this candle right here. We took out a few lows there, and then price pushed back up pretty strongly as of last week. So that was last week's candle, right? So coming off of last week's candle and some of that bullish pressure that came into the market, as we could see, today, between Sunday and Monday, we started a new trading week. So far right now, we're in a 2 up position where we broke the high of the previous week already. So that indicates that there's a possibility that we may continue to get some upward pressure, but we'll wait and see. So for right now, we're bullish for the week, as this is our current the current pressure that we're seeing. Now that is more than likely going to stop at some point, because we do have a fair value gap right here that price is fighting. That price is fighting through. That fair value gap is giving some downward pressure with those sell orders, those large amounts of sell orders that's there, right? So it's going to take quite a bit of buy orders to push through that fair value gap that exists between here and here. So that's what price is fighting through right now, that fair value gap. So we have to play this one on a day-by-day basis to see if price continues to push through that fair value gap and or if it does in fact reverse at some point. And at some point it probably will, and grab all of this liquidity right here. All right, so then when we look at the daily, we see that for today's trading session, again, indicative of the weekly, right? We have continuity with the weekly, where we're showing that the daily is basically a two up position, because we broke these highs right here, again, fighting through this fair value gap that exists within this candle right here. And as a matter of fact, I'm going to put the fair value gaps on each of these time frames so that we can see. So I'm going to do that real quick. Shouldn't take more than a minute to do so. There. Make sure we know where these fair value gaps are. Okay. All right. So there's our fair value gaps. We can see the fair value gaps now on each of the time frames. Okay. All right. So with that said, again, at this point, this gives us the time frame continuity that we need to, kind of get a trade bias for the day, right? So what we're looking at right now is, as you can see on the daily, right? So the setup for the daily, so the bigger setup is going to be once we are able to get through this fair value gap. So here's what could happen, right? So we see that price for the day, and we know the session is about to close. We got about 5 minutes left before we go into a new trading session. So what you're going to look for is a break of this high, right? Breakthrough of this fair value gap right here to get us into a position to take these highs. So once price takes this high right here, right? Look for it to go and take that high and then that high. And then we're going to probably stop again as we have another fair value gap. And just to illustrate what that looks like. So once we're able to take this high right here, look for that high and then that high to be taken. So a 250 pip move once we look to break that high right there, right? So your entry would be the high of today's. So today's high. So the daily high would kind of be your entry. Now you can go down to the hourly and get a better entry, and I'll show you that. I can show you that right now. So if you want a better entry, it's kind of playing out right now. So knowing that, so this is the high of the day, right? So basically we're looking to see if price is going to break this high and continue upward to about, and this is why I like the multi-time frame, right? So we want to see if price is going to, so this is where price is right now, right? So we're looking for price to bounce from here, which looks like we may get our entry signal here in a second. But remember, like I said, the high, so we want price to pretty much break this high right here. And, we take out these highs right here. So we'll look to take this trade to about 150 we say 150.900. That's enough, right? That'll give us that 250 pip move, right? So that's the price that we can look to take that to. So you can set a limit order, right? Right above this high right here. So I would set it like just above this high. So 148.581 could be your limit order, right? To trigger that buy. And then your take profit could be that 150.900 could be your take profit, right? Again, 250 pip move should that play out that way. Now, price could go the other way, right? So your trigger would be if price was to break that low right there, and then continue to the downside. So if price did do that, here's what we would have from the daily time frame. So price breaks the low of the day, right? Then you'll look for price to take out that low, right? And then we'll get here to this order block. You might want to take profit right there. So let's say price does trigger and break these lows right here. It'll go to that low. Like I said, more likely to this order block right here. It could cover the whole order block, but again, we go for liquidity. So will go right here. So roughly about an 82 pip move if price did break to the downside. But it's probably more likely to break to the upside and cover this liquidity. So it'll cover this liquidity, like I said, take out, create a new high, which will create a new 2-bar for the daily, and then we're going to go take out these highs right here. That's simple. And again, like I was saying, so when you drop down to the hourly, you can see where we're starting to get a little bit of a setup here that can get us into that move a little bit earlier than waiting to break that right there. Because let's see if we are able to get in on a move right here. So what we could do is we could wait for this to finish. More than likely, we got what, a couple minutes, like 2 minutes left. This is going to finish as a 1. So your trigger is going to be the high of this 1 right here. It's going to be the high of this 1. So when price breaks the high of this 1, right, we can look for price to move up. We can look for price to move up and, start taking out, these highs, start taking these highs out and then eventually take that high out or what have you. And you can trail your stop if you want to do that. So that could be your early entry into that move that we were talking about on the daily. This could be a possible early entry for that. All right. Now that we got that, I think that's well understood. So next we're gonna go and look back at the indicator that I was telling you about so that you could possibly add this to your own chart and help you to see what you need to see on one chart, all on one chart. Okay. All right, so here, this is my technical chart, as you can see. So the indicator here, I'll show you, and we can see it just changed because the trading day just changed. So that's why everything is now inside bar, right? But every candle that starts out as an inside bar. So all of them start out as 1s, right? So the daily on down just changed because that's where we are right now. That everything starts out as an inside bar until it breaks a high or a low. Okay. All right. So the indicator there, and you're gonna have to do some work with this indicator. So it's called the Strat Teach V2. All right, that's the one you want, the Strat Teach V2. And what you want to do is, if you want it to look like mine, and it's a lot, this comes with a lot goes into this indicator. So what I've done is I've unchecked everything, as you can see. I've unchecked everything. Price label, push right, you can uncheck that if you want to. I didn't bother with it because it wasn't populating on my screen. If you want it, you can show multiple time frame support and resistance levels. That just adds additional lines and stuff on your chart. I unchecked that because it was cluttering my chart up or what have you, and I already have the levels that I need or what have you. This if you check this box, it'll give you the patterns, the numbers. I'm using another indicator for the numbers or what have you in the patterns. These again, 2-1-2 reversals, 2-2 reversal, 3-1-2 reversal, those patterns will populate underneath. Again, just too much clutter. I already have the numbers and stuff. I really don't I can see the patterns or what have you. So I unchecked that box. If you check that box, you'll have to go and check whichever patterns you want to see, or whichever ones you don't. So that's what this is. All right, pivot machine gun. You can check this box for the pivot machine gun as well. Again, I don't need it. Let's see what else here. Okay, so what do I have checked? All right, so what I have checked, let me see, make sure I can show you. All right, time frame, indicators. Let's go to style, see what we got here. Labels, background, line, VWAP. Let's go back. Because obviously I do have something checked, right? Show multiple time frame. No, that's not what we're doing. Yeah. So we got the pivot machine gun, holy grail. We got targets. Let's see. Nope, nope, nope. We can display hammer and shooter. Let me see. I don't know if it does or not. All right, where is this? Oh, this is it right here. Okay. My bad, my bad, my bad. All right, higher time frame levels. All right. So that's no, that's not. I don't think that's it. Hold on. Show target lines, info panel, table alignment. 1 hour, 1 day. Okay, so it is. So it's this one right here. So the info panel. Let's see, right here. Let me make sure. Let's go top right real quick. See if that changes it. Yep. Okay, that's it right there. So so it automatically populates basically. So you don't have to check a box or anything. Again, I just wanted to make sure I had the right one. So it's the table alignment. So it automatically populates on your chart. So that's easy. So everything else, like I said, everything else I pretty much um, took off. I don't really have anything else from this indicator on here. Uh, again, but it allows you a snapshot of the hourly, 4 hour, daily, weekly, monthly, quarterly. And I think I want to put that back down. Let me see. No, I'll leave it right there. Now, what I will say, so actionable, right? So it'll show you if there's an actionable signal to be utilized. Again, like I said, 212, 32, something like that, whatever the case may be. Those are reversal type, or continuation type setups that will populate. So like right here, we had a 122 reversal. Let me take this off. Then let's see another example. Right here, we had a 222 reversal. So that was a two up, two down, and a two down. That was a reversal pattern. That's basically what that says. But again, I use it for the time frame continuity. So as a snapshot, so that I don't have to necessarily go to my multi-time frame chart, I can just look at this and tell what each time frame is looking like. So I know that there are inside bars everywhere except the weekly and the monthly. So I already know that we already know the monthly is giving us a two down. We know the weekly is giving us a two up. So we'll wait as the day develops to get additional continuity with our lower time frames. And then last thing I'll point out is that for the purposes of our time frame continuity, at some point the monthly will change or to stay the same just based off of how sentiment changes throughout the month or what have you. So I'm good with if my weekly, my daily, and my hourly are all confluent. If they're all saying the same thing, I'm comfortable with that. Now, if there's conflict though between my weekly, my daily, and my hourly, then that'll give me pause to, stay out of the market or, not to trade at that point because there's conflict in my time frame continuity. If there's conflict, then you might want to pause, put the brakes on that trade setup, right? Um, that's it. That's pretty much it. And we can see real quick. I'm gonna point this out. The trading session just started, so spreads are high right now. But again, like I said, the trade setup that we're looking for right now, at least right now, for the buy is going to be when price breaks the high of this inside bar right here. Now that could change, right? You can get a better one depending on how this candle does. So you can trail that entry. That's another thing too. You can trail that entry. You don't have to be stuck to one. So if you get a better possibility of an entry, do that, right? This one's a little high. So what if this one, stays right here? Then this become my entry point right here. So I have an entry that I can get right there. then I can cover these, look to cover these highs. That gives me a better entry than this one right here. So you control your entry as well, right? As price continues to develop, because there's a very good chance the price is gonna come down and get this liquidity right here, or what have you. So, as we can see, price, hung out there towards the end of the day, the trading day. So it's not unlikely that price will, can create a 2 down, or it can either do a 3. We could do another 3 to grab the liquidity here and then grab, liquidity here. So again, we'll wait for the development to see how price develops before we look for that entry to the top side. Now, let's say that does not happen, right? Let's say price breaks this, breaks the low of this 3 right here, right? Well, where's it going to go? More than likely, once it breaks this level right here, we can be looking to go and grab these lows right here. So we'll go and more than likely grab these lows, and then I would probably stop right there. So if you were to, get that break right there, then look for price to come down and grab these lows right here. That could be, right? So the trigger. So from the trigger, yeah, we go grab that low, and then grab that low. So 36 pip move, 35 pip move or so to the downside. And then no guarantees there. This isn't a guarantee either, but that's more likely to what's to happen if price was to break this low right here. Price would then go down and grab the liquidity at these lows right here, and then probably stop right here before it, does a little reversal, pullback, correction, whatever the case may be. So, all right. Again, didn't want to make this video too long. Just wanted to share a few tips for the process. I'm gonna call it the process right now, or what have you, because we're using multiple thought processes here. Some of the best from some of the best of the best around the trading industry. To get in. So hopefully this is helpful to you. If you got any questions, as always, feel free to ask. So we got a possible reversal. See, this box right here is just giving you an indication of a possibilities, right? So we got a reversal 1, 2, 2 possibly in the works here. And what that means is, so we got that 1 right here. Then this already turned into a 2 because it broke the low, right? So 1, 2. So this is a 1, 2, possible 1, 2 reversal, right? We don't know yet. It hasn't finished playing out. That's why it's sitting there. It's pending, right? So basically, this is telling you to look out for that 1, 2, 2 reversal that could be setting up. So you got the 1 there. You got a 2 here. So this will be this could be your trigger candle right here. So we can trigger that high, and you see it's giving us the direction. It's giving us direction right there, right? So it could trigger this high right here, for us to start taking out these highs or whatnot. So just, again, that's what the indicator is there for. That way you don't have to do the multi-chart thing, trading view and all of that stuff. So again, hopefully this was helpful to you, and you are well along your trading journey to making this money. Thank you and happy trading.